Hey, I just want to help you in reducing your AGI or adjusted gross income and your taxes by giving to charity. So first, starting off with your adjusted gross income, what is that? It is your gross income less some deductions from taxable income. And that number is important because it sets the bar for other deductions and credits you may be eligible to receive. So the lower the better, right? It also tells you where you are and shows you where you are in the tax bracket. So what tax bracket you're going to be in overall. And so there's three separate ways. There's many ways to give to charity, but three ways I'm going to address today. So first off is just gifting cash and maybe some property. So let's say you're single and you have an adjusted gross income of, let's say, $110,000. So let's say you gift cash of $10,000 and $5,000 of property, so a total of $15,000. And so at $110,000 of adjusted gross income before the deduction, you are in a 24% tax bracket. And so gifting that $15,000 of the cash and the property, that brings your AGI down to $95,000, which puts you in a 22% tax bracket. So it's very powerful to lower your adjusted gross income, but there's some caveats to that. You have to itemize in order to take advantage of that deduction, and that's itemized on your taxes. And so because the itemizations are so high right now, single, it's $14,600 for the standard deduction rather, and married filing jointly, the standard deduction is $29,200. So you may not get the benefit of the deduction because it adds up all of you have to be able to itemize to even get the benefit of the deduction, if that makes sense. The other two ways I really like to give to charity to reduce your AGI or adjusted gross income is by gifting appreciated securities. This is very powerful. So let's say you have, property that has appreciated from $5,000. So let's say you bought a stock for $5,000 and it has grown to $20,000. And so you're gifting $20,000 to charity. You have that unrealized gain there of $15,000. So what you do is you gift the stock directly to charity. You have to work with your broker and your advisor through your brokerage account to the charity. And you get the tax deduction of the $20,000 and you don't pay the capital gain. And because it's a charity or a 501c3, they don't pay the tax either. So it's a double whammy for you. There's some nuances around it, but you have to do that directly with charity, but that is very powerful. And the third way, just talking about reducing your adjusted gross income, is in the form of gifting part of or all of your required minimum distribution to charity. So the IRS has deemed that you can give up to $100,000 of your required minimum distribution. So this is what you're required to take out after age 70, 73, or 75, depending on your age and when you were born. But you can gift up to $100,000 to charity. And again, this is where you have to go directly from your IRA to the charity. So you have to coordinate that with the custodian that's holding your retirement account. But that's very powerful also because it is not a deduction at that point. It just does not even show up on your tax return. So it's even a before the line deduction. So there's other ways that you can save money with gifting to charity. These are just a few of them that I like, but please feel free to reach out to us if you have any questions.